Okay, everyone, shall we start? How are you all? All good? Okay, so yesterday we had an introduction of our subject called CMAD, Cost and Management Audit, and we discussed that our whole subject is divided into 4 parts, where the 50 marks of portion is dedicated to what? Cost audit. Remaining 25 marks we have for management audit. Then we have 15 marks of internal controls, internal audit and operational audit. And then we have the 10 marks of two small topics. One is called anti-money laundering and forensic audit. Now, and then after that, we also started with the very first topic that is called what? Basics of cost audit, in which we understood a little bit about the history and background. And after that, we have also understood the evolution of what? This cost audit, like how cost audit was brought into the existence, right? So let's do the quick revision for the same and then we'll proceed for the next. Now, what we have learned in that key pre-independence, the government of India, due to the World War breakout between 1 and 2 World War and 1 and World War 2, the government used to give the cost plus agreements to the private sector or the public sector companies, right? Government was not that much focusing on the which area? Costing area, right? But later on, they realized that these companies, in the name of cost plus agreements, are doing some scams and scandals that we already understood yesterday. And then government constituted the two commission, if you remember. What were the two commission name? Vivian Bose. What was the name of the first commission? Vivian Bose. And the second one was what? Datta Commission. The first one was Vivian Bose and the second one was Datta Commission. Why these two commissions were incorporated? These two commissions were incorporated with the sole objective of identifying what are the reasons these scams and scandals are happening. Then they realized some fact that they are charging excessive cost of what? Production. And then government realized its mistake. And after the recommendations given by the Vivian Bose and Datta Commission, they finally realized that costing is also as important concept as which accounting? Financial accounting. And cost audit is also as important as what? Financial audit. So they started giving the same level of importance to the costing as well as what? Financial. And that's how the emergence of the cost audit came into what? Existence. After that, we also understood, if we'll talk about little bit of history and background, what was the first incorporation of our institute? Was it an institute directly or was it incorporated as a company first? It was incorporated as a company. Year was 1944. So 1944 में the Institute of Chartered Cost and Work Accountants of India Limited was incorporated under which act? Companies Act 1913. After that, in 1959, we converted this company into an act by passing the bill in the both houses of Parliament under the Act of Parliament. Then finally, in 1965, first time the cost audit was what? Introduced. And I hope I remember I told you that first industry also. What was the first industry on which cost audit was conducted was cement industry. And after that, in 2008, the 1965 to 2008, we had 44 industries altogether in India on which cost audit was happening. Then later on in 2008, government realized let's squeeze the industries into 39. So they incorporated one expert group in the 2008, and in 2009, that expert group passed on their report to the government, and government finally in 2011, remember this landmark year, what is the year? 2011, the CRA rules got framed. What is the name of the rules? CRA stands for Cost, Records and Audit Rules 2011. But immediately after 2 years, what happened? Companies Act 1956 got replaced by what? Companies Act 2013. And that's why CRA rules 2011 got changed to what? CRA rules 2014. Since then, we had so many amendments in 2014, then we had some amendments in 2019 and like that. But now the rules names are CRA rules 2014. So this is what the brief history we have done. So let's start today with the very first and the foremost and the most important section, that is called what? Section number 148, which talks about the which audit? Cost audit. And the another name of the section is known as Audit of Cost Records. What is the name? Audit of Cost Records. Now what this section is saying, first of all, there are some interpretations which you need to understand, and on the basis of which one or two times MCQ question has also been asked. Now, can you read the sentence number 1, please? Can you read the interpretation number 1? What the first interpretation is saying? Cost audit is not a statutory audit. Cost audit is not a which audit? Statutory audit. What is the meaning of that? Whenever we take statutory audit word, whenever we use this word, we always talk about audit of financial statements. Statutory audit is connected with what? Audit of financial statement. And we practicing CMS do not do the audit of what? Financial statement. We do the audit of cost records and cost statements. Am I correct? So cost audit is not a statutory audit. Because statutory audit is financial audit. So, did you understand the interpretation number 1? The cost audit is not a statutory audit. Rather, it is in addition to which audit? What is the meaning of this line? Now, let's say, for example, it's Coal India Limited. What is the name of the company? Coal India Limited. Is it into manufacturing and mining? Now, obviously, cost audit to definitely will take place. But Coal India Limited might be preparing its financial statements also or not. So on that Coal India Limited, 2 audits will take place, rather 3. Secretarial audit also will take place. So tell me the 3 audits which will take place on Coal India. First one is going to be statutory audit, which is audit of financial statements. Second one going to be, which is the audit of cost records. And being a listed company, secretarial audit under section 204 is also going to happen on what? Coal India Limited. So cost audit is not a statutory audit. Repeat after me. Cost audit is not a, it is not a part of statutory audit also. What is the next one? It is not a part of statutory audit. Rather, it is in addition to which audit? Statutory audit. Did you get the point? So did you learn the 3 points? What are the 3 points? It's not a statutory audit. It's not a part of statutory audit. It is in addition to which audit? Statutory audit. This is what we mean by the term called what? Cost audit. Now, next thing, what we need to understand is, sir, cost audit. Let me skip the point number 2 first. Cost audit is not a which audit? Regular audit. What do you mean by that? Ki cost audit is not a regular audit. Yesterday I told you cost audit is a yearly audit or turnover based audit. So as it is turnover based audit, 1 year turnover may breach, 1 year turnover may not breach. So cost audit may happen. So that makes this audit regular audit or irregular? Irregular. So cost audit is not a regular audit, and cost audit is also not a periodical audit, and cost audit is not a yearly audit. So what are the 3 things we earned? It is not a yearly audit, it is not a periodical audit, and it is not a. So tell me, what is cost audit? So cost audit is not a statutory audit. It's not a part of statutory audit. It is in addition to statutory audit. Unlike statutory audit, it is not a periodical audit. It is not a, and it is not a yearly audit. 100% clarity. Now the question is, sir, when we do the cost audit, basically which industries, the whole 39 industries in India are divided into? Majorly, they are divided into 6 sectors. What are the 6 sectors? We have manufacturing, then we have what? Production, processing, mining, extraction, assembling. Now, anybody in the class can tell me why all those 39 areas, why those all 39 industries are divided into these 9 sectors only. Why they are divided? Because these 9 sectors made 2 things are very common, that is called raw material and labor. What are the 2 things very common? Be it assembling, be it what? Manufacturing, be it mining. Everywhere you need raw material and everywhere you need what? Let's take an example of iPhone assembling industry in Chennai. Are you getting? Suppose iPhone has established one industry in Chennai, even though they're importing the parts from the different parts of the world. Are you getting the point? But are they getting assembled in Chennai? Now, to assemble, what do you need? You need labor and you need what? Raw material. So wherever the raw material and labor will be included, what are the 2 elements? Raw material and labor. You will find that industry will be covered under a which audit? Cost audit. Industry will be covered under the cost records. Are you getting the point or not? Now, what are the 3 things we learned? Cost audit is not a statutory audit. It is in addition to statutory audit. It's not a part of statutory audit. It's neither regular nor yearly audit. And it is broadly classified into which industries? 6 industries. What are the name of the industry? Manufacturing, production, processing, mining, extraction, and assembly. Why? Because in all that, what is a common thing? Raw material and labor is a common thing. Did you get the point? Now, next most important thing which you need to understand, sir, who and only who can do the cost audit? You will clearly see in our CAWA Act, it is written that this word is mandatory to be learned. What is the word written? Only. Only practicing CMA can do the which audit? Cost audit. Tell me, what makes a CMA different from the practicing one? COP. It means you should be a qualified member of institute, holding a membership number and holding a what? COV. Then only you will be called as a practicing cost and management accountant, and you can do the which audit? Cost audit. Is it clear? The only word why it is being added, chartered accountants are not allowed to do the audit. Let me give you some brief history background also. Before 2011, when the CRA rules were not framed, before 2011, number of practicing CMAs were too rare in India. I mean, it was very hard to find any practicing CMA firm in India. So that's the reason at that point of time, the cost audits, if CMAs are not there, even though it is in the act written that only who can do, CMA can do. But if the CMAs are not available in practice, then they had to shift their focus from practicing CMAs to what? Practicing CS. But then they realized that if the practicing CS will do cost audit also, statutory audit also, already 100 plus audit fields are available for whom? Practicing CS. Then nothing will be exclusively left for which category? Practicing CMA. Then in 2011, when the CRA rules came, they made that rule compulsory ki only and only who can do? Practicing CMA can do the which audit? Cost audit. Practicing CMA, other than that, no person is eligible to do the cost audit. So who can do the cost audit? Practicing CMA. Now, the most important point which you need to understand in section number 143. I hope you remember yesterday we had discussed. Tell me, how many cost accounting standards do we have? 24. How many rules do we have? 6 rules. Now, total how many rules we have? 6 rules. And how many cost auditing standards we have? 4. How many sectors do we have? 39. Out of which 6 are regulated. Remaining 33 are? How many cost records do we have? 30. So you remember the figures, right? Now, how many cost rules we have? 6. Out of that, 2 rules we are going to do today only. Anyways, we are going to discuss it in our next chapter also. But majorly 2 rules we are going to understand today only. One is called Rule 3 and one is Rule 4. Out of 1 to 6, we are going to do Rule 3 and Rule 4 today. What is Rule 3? So in total, there are total how many rules do we have? 6 rules we have. Rule 3 talks about cost records. Rule 3 talks about, and rule number 4 talks about cost audit. So remember, rule 3 talks about cost records. Rule 4 talks about, put together we call them as CRA rules. What do we call them as? Cost records and audit rule. So cost record is a separate rule. Cost audit is a what? Separate rule. Now what is rule number 3 saying? Rule number 3 is saying very simple. When these companies have to start maintaining the cost records, not about the cost audit. The rule 3 is dedicated only on what? Cost records. Now, in the preceding financial year, in the which financial year? So we are going to check in the preceding financial year. In my preceding financial year, if my client's turnover is greater than equals to 35 crores, how much greater than equals to? Then from this financial year onwards, they have to start maintaining and preparing the cost records. How many? 30 cost records. Out of 30, some might be applicable to you, some might not be applicable to you. The cost records ka form number is what? The form number is CRA1. What is the form number? CRA1. So rule number is 3, form number is 1. Rule number is 3, form number is 1. Both are talking about the which records? Cost record. So tell me, when as an entity, I have to start maintaining cost records? As an entity, if in my preceding financial year, my turnover is greater than equals to what? 35 crores, then from this financial year, I have to start maintaining the which records? And once started, always applicable. Repeat after me. Once started, it is always what? Applicable. It's not that once year you started the cost records, the next year turnover is not matching. Suppose 25-26 ka my turnover is 57 crores. What is my turnover? 57 crores. So tell me, in 26-27, do I have to start maintaining cost records? Yes. But 26-27 ka turnover is 25 crores. Do I have to still maintain it in 27-28? Yes. So once applicable, it is Always applicable. But first time, when do you have to check? Preceding financial year. Mein. If the turnover is greater than equals to what? 35 crores. So boss, you have to start maintaining the which records? Cost record. Are you getting the point? On which industries cost records are applicable? All the industries, be it a manufacturing, mining, production, processing, assembling, and extraction. And total, how many industries are there? 39. All are going to get covered under what? Cost records, except one industry that is called SME. Except what? SME. What is SME? Small, medium enterprises which are registered under MSME Act. What is MSME? Micro, Small, Medium Enterprises Act. If you are a SME registered under what? MSME Act, you need not prepare cost records even if your preceding financial year ka turnover is greater than equals to what? Let me tell you one thing, SMEs are exempted from Rule 3 and Rule 4 both. What is Rule 3? Cost records. What is Rule 4? They don't have to go for both of them. Either it is cost record, then also they are exempted. Cost audit, then also they are exempted. Are you getting the point? So tell me, what did you learn in the rule number 3? What is the rule number 3 saying? Cost records. Either you are from a which sector? Regulated sector. Or you are from a which sector? Unregulated sector. If you belong to manufacturing, mining, production, processing, extraction, assembling. Except which one? SME. Small and medium enterprises. In your what? Preceding financial year. If the turnover is greater than equals to what? 35 crores, you have to start maintaining the which records? Cost record. And once it is applicable, always applicable. This is what brings an end to your one small rule called what? Rule number 3. Did you understand rule number 3? So rule number 3 is applicability of cost records. Now coming to rule number 4, which is called applicability of which audit? Cost audit. Up now, I already told you total how many industries are there? 39. Out of 39 industries, 6 are what? Regulated. And remaining 33 are what? Unregulated. Anybody in the class can tell me what is a limitation and what is a limits for the regulated sector and unregulated sector? And when do we have to check it? See, try to understand. For the regulated sector, there are two conditions. For the unregulated sector also, there are two conditions. And both of them has to be satisfied. It's not or, it's and between the both the conditions. Both the conditions are required to be satisfied. So you know, what do you mean by regulated sector? I hope you remember. What are the 6 regulated sectors we have? Sugar, telecommunication, electricity, petroleum and gas, fertilizer, drugs and pharma. Repeat again. Sugar, telecom, electricity, petroleum and gas, fertilizer, drugs and pharma. So if you belong to these 6 sectors or industries, you are called regulated sector. Remaining 33 are what? Non-regulated. Now, if you are from a which sector? Regulated sector. So central government has made one provision for you. What is a provision? Can you start reading? Read the point number 1. Overall annual turnover from the production or manufacturing from such goods and services should be greater than equals to what? 50 crores. When do we have to check it again? Immediately preceding financial year. If in the immediately preceding financial year, my overall turnover is greater than equals to what? 50 crores. That is a condition number 1 satisfied. I am from which sector? Regulated. When I am checking it? Preceding financial year. What I am checking? Turnover. And how much I am checking? Greater than equals to 50 crores. And what is the next condition? Or and. Can you read this point and tell me what is the interpretation of this point? Aggregate turnover of which individual goods and services for which we have started maintaining the which records? That should also be greater than equals to what? 25 crores. What is the meaning of that? Now, let me break it down into very simplified manner. My preceding financial year ka annual turnover should be greater than equals to what? 50 crores. So suppose my turnover is 75 crores. How many crores? Condition number 1 satisfied. Now let's take one example of, suppose my company name is Renuka Sugars Limited. What is the name of the company? Renuka Sugars Limited. Now Renuka Sugars Limited ka 25-26 financial year ka turnover is, say for example, 160 crores. What is the amount of turnover? 160. This 160 crores of turnover is coming from total 4 products. How many products? There are two products which are generating 140 crores of turnover, and there are two products which are generating 20 crores of turnover. So two are generating 140 and two are generating 20. These two products which are generating 140 crores of turnover, for which this company need not maintain which records? Cost records. But for these two products, this company need to maintain what? Cost records. Now please tell me, is cost audit compulsory on Renuka Sugars Limited? My question number one, why I took the example of Renuka Sugars Limited? Because we are talking about the which sector? Regulated. Is sugar one of the regulated sector? So it means, what is the point number one? Whenever you will see the question, first of all, read the name of the company. If it is Renuka Telecommunications, regulated. Renuka Electricity Generation, Supply, Electricity Supply, Electricity Generation, Electricity Supply, Electricity Transmission. What are the three words? Generation, Supply, Transmission. Then it will all be considered as electricity sector only. If it is telecommunication, regulated. And if it is pesticides, fertilizer does not include what? Pesticides. That is what the major core. You have to remember the words. Tell me the 6 words. Sugar, electricity, petroleum and gas, fertilizers, then drugs and pharma. And did you get the point? If you will see these names, then only you have to see that, first of all, in your brain only you have to make it, is it a regulated sector or not? If it is regulated, there are two conditions. Condition number one, annual turnover should be greater than equals to, and turnover from those goods and services ka production for which we are maintaining cost record, that should also be greater than equals to. So my question is cost audit required in case of Sugars Limited or not? Answer is no. First condition is matching. Which condition is matching? Annual turnover condition is matching, but this condition is matching or not matching? So due to the non-matching of this condition, cost records are compulsory, but there is no cost audit for this financial year. Acha, will your answer change if the next year it is 125 and it is 35? Now tell me, overall turnover is greater than equals to 50 crores and cost records based turnover is more than equals to 25 crores. So hence cost audit is applicable. So in 1 year it did not happen. In next year it what happened? Will your answer change if the next year it is 150 and 10? Again next year cost audit or no cost audit? That's why it is not a regular, periodical and yearly audit. Did you get the point or not? So which are the two conditions to be satisfied for regulated sector? Tell me now, both together. Overall annual turnover should also be greater than equals to what? 50 crores. And turnover for those production of goods and services for which we have started maintaining as per form number CRA 1. That should also be greater than equals to what? 25. If both the conditions are satisfied, then only cost audit will take place. Is it clear? Now, if my client belongs to the which sector? Non-regulated. So suppose iron and steel, tea, coffee, rubber, aerospace, defense, hospital, electricals, electronics, anything other than those 6 are called as which sector? No. Simply 50 is substituted by 100 and 25 is substituted by 35. Tell me the two conditions to be satisfied. Annual overall turnover should be greater than equals to 100 crores and turnover from such goods and services for which what we need? Cost record should be greater than equals to 35 crore. So it means, what is the only change? The only change is that this 50 has become what? 100 and this 25 has become what? 35. That is the difference. Did you get the point? Now let's say for example it is Vizag Steel Plant Limited. What is the name of the company? First of all tell me from the name itself, is it a regulated or non-regulated? Acha, non-regulated sector. Now tell me what is my annual turnover should be. So I, as a Vizag Steel Limited, my annual turnover is 600 crores. How much? Out of which 570 crores is coming from those goods and services for which I need not maintain cost records, and 30 crore is coming from those goods and services for which I need to maintain the cost records. Question is cost audit compulsory? But is cost record compulsory? Yes. But it means having a cost record does not make it mandatory to have a which audit? Cost audit. That is what rule number 3 is separate and rule number 4 is separate. Now, will your answer change if my client is Vizag Steels Limited but registered as an SME under MSME Act? No cost records, no cost audit. Like that, they will ask you within one question, the another question, and the another question for 1 mark each. Are you getting the point? So this is the maximum you need to learn under the which rule? Rule number 4. So what was rule number 3? Cost records. And what is rule number 4? So tell me rule number 3 and 4 put together now. Rule number 3, applicability of cost records. If my client either from a which sector, regulated sector or a non-regulated sector in the preceding financial year, if the turnover is greater than equals to 35 crores, then from next coming financial year onwards, they have to start maintaining what? Cost records. Once applicable, always applicable. Tell me the provisions relating to cost audit. Depends upon whether the client belongs to a regulated sector or unregulated sector. If it belongs to the regulated sector, two conditions are required to be satisfied. What are the both conditions? Annual overall turnover should be greater than equals to what? 50 crores, and turnover from those goods and services for which cost records are required to be maintained should also be greater than equals to 25 crores. And on the other side, unregulated sector में 100 greater than equals to 100 crores and greater than equals to 35 crores. Did you understand the point? So this is what the cost audit requirements for regulated sector and non-regulated sector. Is it clear now? Now the next thing which we have to understand, very important thing, that is called sir, what cost auditor considers and what statutory auditors consider. Now this is one small difference what they may ask you in the examination. What are the major things cost auditor does and what are the major things statutory auditor does. So basically it's a comparison between practicing CA and a practicing CMA. Let me take you to that comparison in a very simplified manner. Let's talk first about whom? Financial auditor, who is a practicing CA. We also call it as statutory audit, right? First of all, who prepares the financial statement? Management. Who prepares the financial statement? Management. Auditors never get involved in preparation and presentation of financial statement. We are examiners. We are not the preparers. We are what? Examiners. So same way, management only is going to prepare what? Cost of production or cost statement. So in both the cases, we never prepare or we never assist the client in preparation. I'm not saying that we can't assist. If we are assisting in preparation of cost statement, I can't be the cost auditor. Reason being very simple. Let's say, for example, there is one client called ABC Sugars Limited. Now, this ABC Sugars Limited is telling me, Rohit, we are not able to understand how to prepare our cost records. We are not able to understand how to prepare our cost statement. I said, okay, sir, I will help you out. Now, if I'm helping them in preparing what? Cost records. And if I'm helping them in preparing what? Cost records. I can't be their which auditor? Cost auditor. Otherwise, I will face self-review threat. What I will face? What do you mean by self-review threat? I only prepared their what? Cost statement. I am only doing a what? Cost audit. Now, don't you think it will be like question paper only? You only set an answer, only you check. Giving the marks to yourself is nothing but called, you will never be able to find your mistake. So that's why I will face a which threat? Self-review. So in both the cases, be it a cost audit or be it a financial audit, who prepares the financial statements and cost statement? Management and management. Let's do it in a comparison way. Now, management is preparing financial statements as per what? AS. What is AS? Or you can also call it as what? Indian Accounting Standards. What about the cost statement? They are prepared as per CAS. What is CAS? Cost Accounting Standard. How many do we have? 25. 25th has been recently added. So up to this point you understood? Now there comes the turn of auditor. Now for the auditors, the standards what we have in financial audit are known as what? SA. What is SA? Standards on auditing. But we have CAAS. Cost Auditing and Assurance Standard. What do you mean by assurance? Opinion. So we have SAs here, but we have what? CAAS here. Now next one. When we do the audit of financial statement, what do we check? We check gaps. What is gap? Tell me on the other side what will be GACAPs? Generally accepted cost accounting principles. Do we check that? Okay. Now generally accepted accounting principles, and what do we check there? Generally accepted. These are the major two differences which you need to understand between financial auditor and what? Cost audit. Okay, let us revise it again. Who prepares both the statements? Management, be it a financial statement, be it a cost statement. But who does the audit? Practicing CA, practicing CMA. When we do the audit, how do we do the audit as a practicing CA? Following SAs, standards on audit. How do we do it as a practicing CMA? Following CAAS, cost, auditing, and how they prepared their financial statement in accordance with AS or Ind AS, and how they prepared their cost statement in accordance with CAS, cost accounting standard. What do we check there? Gaps, and what do we check here is GAAP, generally accepted cost accounting principle. 100% clarity. So this is what do you mean by the term called what? Cost audit. This is called the meaning of the term called cost audit. I hope you got the clarity. So cost audit mein what did we learn? It is not a which audit? Statutory audit. It is in addition to what? Statutory audit. These are the industries. Why? Because what is common between them? Raw material and labor. It is not a regular, periodical or yearly. Who can only do it? Practicing CMA. What are the 2 rules out of 6 we have done? Rule 3, Rule 4. What is Rule 3 talking about? Cost record. Rule 4 talk about cost audit. Cost records का turnover limit is greater than equals to what? 35 crore. Cost audit का depends upon regulated or unregulated. If it is regulated, it is 50 and 25, 100 and 35. Greater than equals to, not greater than. It should be greater than equals to. And both the conditions are required to be satisfied. So audit is turnover based, but in the cost records, once you start preparing the which records, cost records, there is no stopping. Once applicable, always applicable. Clarity up to this point? And that is what the major difference between the which auditor and which auditor? Cost auditor and financial auditor. Now, let's understand. Sir, what cost? This is all given under one section only. Right now, we are doing only one section. That is section number. Anyways, we have to repeat this section again and again. So, I'm telling you in detail now only so that in future, when this section will come, we can do it in a summarized form. Now, can you read the heading? What is the heading? What a cost auditor can or cannot perform. If you are doing a cost audit in one client company, in the same client, you can't be its which auditor. That you already know. You are prohibited from doing statutory audit. Tell me, who can only do cost audit? Practicing CA. Then who can only do statutory audit? Practicing CA. So that is the reason you can do or you can't do. You can't do the which audit? Statutory audit. What is the next audit you can't do? You can't do the what? GST. But let me tell you one thing, GST audit has already been abolished in the year 2022. It means you are not even allowed to fill the annual returns of GST for the client also. So neither you can get involved in which audit? Statutory, nor you can get involved in GST audit. You can't be its which auditor? क्योंकि under section 44 AB of Income Tax Act 1961, it is mentioned that only practicing chartered accountant can do the which audit, and you can't be its which auditor. Can anybody tell me what is the reason of fourth one? Why I can't be? Because as a cost auditor, you are external. You are a which party? And here you are what? Again, which kind of threat? Self-review. You are doing internal audit of the entity, and at the same point of time, you are doing what? External audit of the same entity. Don't you think that you will face a threat? Which threat you will face? Self-review threat. Is it clear or not? So tell me, what 4 are your disqualifications? You can't do the statutory audit, you can't do the GST audit, you can't do the, and you can't do what? Internal. These are the disqualifications of being a which auditor? Cost auditor. Is it clear? Now, what is the next thing? Now the main journey will start. Now, let me tell you one thing. Even though in section number 148, it is not written that we are doing rule number 5 and 6, but actually rule number 5 and 6 are already covered in section number what? 148. Which 2 rules we already covered? 3, cost records, and 4 what? Appointment of cost auditor is 5, and how he issues the report is 6. So now there is one sequence you need to learn, and you have to understand that sequence with form numbers. One form number you already know. What is that? CRA1. That is relating to which records? Now we are going to do 2, 3 and 4 with some time periods also you need to remember. Now let's understand one thing basic. Can anybody tell me, as per section number 139, not expecting you to remember section number, but as per section number 139, if you are a statutory auditor, if you're a which auditor, you are always appointed by shareholders in AGM. I hope you remember that. A practicing CA who does the statutory audit is never appointed by board of director. He's always appointed by, but that is not at all the case in our case. In our case of cost audit, we are always and always appointed by whom? Board of director. That makes one point which makes it different from the statutory. Statutory auditor is appointed by members in AGM and we are appointed by board of director. Obviously, board of directors will conduct what? Board meeting and they will pass what? Board resolution. On that board resolution, my name should be written. So that's how you are appointed by board of directors. Now, read the point. Within 180 days. Can you read the whole point from the commencement of financial year? To read the whole sentence number 1, you are appointed by whom? Board of directors within, from the, again repeat, from the, let's do it practically. Which financial year is going on right now? Commenced on. So what will be the last day that I should be appointed for 26-27 audit? 30th September. Is it going to be 30th September or not? No. Law और audit का rule याद है? What did I tell you? Whenever the time period is given in weeks, consider weeks. Given in months, consider months. But if it is given in days, consider exactly the days. It is going to be 27th September 2027, 2026, which is going to be the last day by when I should be appointed. But sir, we to generally understood that auditing starts when what ends? Accounting ends. Auditing starts when what ends? We always appoint auditors in advance. I'm saying his appointment is required within 180 days from the commencement of what? Financial year. He will wait till the end of what? Financial year. It means he will start doing audit when? After 31st March 2027. We appoint him in advance, but he will start doing the audit when? After the end of the what? Financially. So tell me, as per exactly 180 days, what is the date coming? 27 September 2026 is going to be the last day by which the cost auditor must be what? Appointed. Is it clear to all of you? Are you getting the point? So tell me, who appoints? What? By passing in a board meeting within 180 days from the commencement of finance. So always we appoint in the commencement. Answer is yes. Now, once we have appointed a which one? Cost auditor. Who doesn't know that we have appointed a cost auditor? Shareholders का तो कोई लेना दे. देखो sir, let me give you a very clear picture now. Try to understand. No one in the shareholder is interested in your cost because cost statement. Think logically. Yesterday I told you we have XBRL software. What is the software? And what is the reason I told you? Costing is a very secretive information. Shareholders want a public information. Which information? That's why you will find financial statements on the Google, but you will never find the cost statements of the company on what? Google. So we never do cost audit for shareholders. We do it for ourselves. First of all, तो let us understand कि sir cost audit का objective क्या है? Why do we do the cost audit? We do the cost audit because I want to know कि in which way I can reduce my cost of production. In which way I can do the costing of my products and services. After this topic, I'll take you to the basic. Genesis के बाद, I will, after this 148, I'll take you to the basics. What are the social objectives of cost audit? What are the main objectives of cost audit that we have to learn? Are you getting the point? So cost audit objective is never ever to report it to shareholders. It is a very private affair. It's a which affair? Private. In a coded language. Which language? That's why also we are not appointed by whom? Shareholder. We are appointed by board of. Who runs the company? Who is more interested in knowing the cost of production? Board of directors. Logic समझ में आ रहा है? Are the dots attaching? So, board of directors appoints us within 180 days from the commencement of finance. Now, who doesn't know that we have appointed a cost auditor? Central government. Who doesn't know? Central government. MCA portal पे will go and will file the form number CRA2. What is the form number? By which we will send the details of our cost auditor or cost auditors to the central government within 30 days from the date of appointment. Within how many days? Now let me tell you in comparative mode, it will be easy for you. Dhyan se sunna. When it is statutory auditor, which auditor? We inform it to whom? ROC. We inform it to whom? ROC. In form number ADT1. What is the form number? When we appoint internal auditor, which auditor? We inform that to, again whom? ROC in form number MGT14. What is the form number? But when we appoint a which auditor? Cost auditor, we again inform it to central government. Here you can use the word MC also. You can also use the word RD. You can also use the word ROC. One of the same thing. But I will say that preferably you should use the word central government in form number CRA2. Sir, what is there in CRA2? CRA2 is also containing the details of my auditor. So what do you mean by details? His name, membership number, are you getting the point? Professional address, COP, date of joining COP, is he a ACMA or FCMA? All details. Who wants to know? Central government. If we want to know whether you are getting your cost audit done or not, to send us the details of your which auditor? Cost audit. So who sends that detail? Who appointed? Board of Directors. So who will send? So start reading the point number 2. Start reading. Board of Directors after appointment of which auditor? Cost auditor shall what? Intimate to the central government in form number what? Within 30 days. So the day we have appointed our which auditor? Cost auditor. In the next what? 30 days, you have to send the form number what? CRA2 to the whom? Central government, giving the details of your which auditor? Cost auditor. So who knows now? Central government, and you appointed also. Now formalities are over. Now next point. Sir, what if my cost auditor resigns? He left in between, died. Atma met with whom? Paramatma. Or what? Removed. What are the 3 cases? Resigned. He himself gave a resignation, or he what? Died, or he got what? Removed. See, if it is resignation, if it is death or removal, this is different in case of what? Statutory audit. Statutory audit mein resignation ke we have a separate section, and for the removal we have a separate. But here mostly, be it a death, resignation and removal, we are going to DRR. Can you remember DRR? Debenture redemption reserve. So death, resignation, removal. Death, resignation and removal. Now tell me, he went. Is the casual vacancy arised? Now do we have a cost auditor or no cost auditor? Who will bring it again? Board of Directors. But now not within 180 days. That time is first time. Now is it the second time we are bringing? That is only 30 days. How many days? So who will fill the again? Board of Directors shall appoint a what? Cost auditor within how many days now? 30 days. But remember, who doesn't know the details of my new cost auditor again? So we'll again send form number to the home with the how many days? 30 days. So it means CRA2 comes into the picture 2 times. Once, first time we are appointing the which auditor, and second time when it is death, resignation or removal. Both the time pe we have to, it means central government kya bol raha hai? You remove, you resign as many times. That many times you have to send me the form number what? CRA. I need the updated details on your which auditor? Cost auditor. Because central government directly communicates with whom? Cost auditor. Because these are regulated sectors. Which sectors? Regulated. Did you get the point? So tell me, did you understand the whole story so far? So let's talk. Who appoints? By passing in a board meeting within, from the, who doesn't know? The board will send CRA2 to the whom? Within, from the date of appointment of the cost auditor, giving the details. What if our cost auditor died, resigned or removed? Again, board will fill the casual vacancy. Let me write it here. Board shall fill casual vacancy within how many days? 30 days. Should I ask you one question now? Try to understand this question. ABC and Co. cost auditors have been appointed. What is the name of the firm? ABC. All 3 are what? practicing CMS, and they got appointed as a cost auditor, right? Out of ABC, A was a engagement partner. First of all, you need to learn some technical terms. Whom do we call engagement partner? Among the whole firm, the one who actually does start and complete the audit is known as EP. What is EP? Engagement partner. So A was an engagement partner, remaining B and C were taking care of other cost audits. So out of this firm, first of all, you need to understand appointment letter never comes in your name. Appointment letter always comes in a firm's name. It comes in a which name? Firm's name. Among the partners, they will decide mutually, and then they will decide that one will be the EP. What is EP? He will only start and he will only complete the audit and he will only sign the audit report. Are you getting it? That person is known as what? Engagement partner. So who took the responsibility? A. A died. Is it a casual vacancy? A died. What are the three cases where casual vacancy will come? Death, resignation. A died. Is the firm dead or one partner in the firm dead? Firm is still what? Alive. Auditor is still what? Alive. Because appointment letter comes in the name of, not in the name of person. So this is not a casual vacancy. Instead of A, who will take over? B or C? But what if all three went to Goa? And Goa ke beach mein, they were doing parasailing and rope got cut. And they drowned. All three died on the spot. Ab batao. Now, firm mein anyone alive or none? This is called a what? Casual vacancy. Then the board will fill the casual vacancy within how many days? 30 days. And again, it will re-inform to whom? Central government. Form number what? CRA. Is it clear or not? So this is what do you mean by if cost auditor resigns, dies or... Okay, now let's understand, sir, what is the next scenario? The next scenario is very simple. What is the name of the topic, read? Now please tell me what was the time period for his appointment? The time period of his completion is also 180 days, but now from the end of the financial year. Let's take this same example. 26, 27 May, what was the last date we appointed him? 27 September 2026. Till what day he will wait? 31st March 2027. So auditing will start from 1st April 2027 till 27 September 2027. Because that time period is also what? 180 days. But this 180 days are now starting from when? From the end of the word financial. So they have kept the importance of the term called audit. Audit never starts during the financial year. It is just that we appoint the auditor during the financial year, but he will start doing the audit after the end of what? Financial. Because auditing always starts when what ends? Accounting ends. So he's going to complete the audit by which date as per our financial year? 27 September 2027. Is it 100% clear? Okay. Now, after the completion, what he will do? Now, here the main topic starts. Once the audit report is over, cost auditor will prepare the audit report and will forward the cost audit report not directly to government. He will forward the cost audit report in form number CRA3 to the whom? Okay, who appointed him? Now the question is, sir, why? Why he is not directly sending? Remember, there could be a positive opinion, there could be a what? Negative. Suppose I'm 100% okay with your cost records, cost statement, principal and accounting, everything. So I'll give a which opinion? Positive. But let's say, for example, there are some areas in your factory where I found some scams and scandals, frauds and errors. So I gave adverse remarks on those areas. Which remarks? Listen, in auditing, we call it as reservations. What do we call it as? So some language you need to reproduce in the examination to get a better mark. We call it as reservation or qualified remarks. What do we call? So who remarked on whom? Auditor remarked on some frauds and errors, which he found at whose place? Client's place. Now tell me, who is the right person to explain such frauds and errors? Board of Directors. That's why we first send cost audit report to whom? Form number is CRA3. Tell me 1, 2, 3. Cost records CRA1. Intimation of cost auditors details to central government CRA2. And we are preparing the cost audit report in This is what we file in XBRL format. Are you getting the point? I'll show you the cost audit report also. How do we file the report? This is what we file in XBRL format, keeping the things confidential. So we gave this report to whom? So sir, if you are filing it in XBRL format, how the board of directors will read? They have a public key. They have a which key? They will decrypt the encrypted audit report. And that's how it will be visible. That's the reason we keep it confidential. Did you get the point? So we give it to whom? Board of directors within 180 days from the end of the financial year, along with my modification and what do you mean by modifications? My negative remarks, modification. You call it as modified, qualified, adverse, or reservations. Any words you can write, modifications and reservation. Now tell me, who is explaining me? So board of director have 30 days now. How many days? Okay. I gave report today. What is the date today? 30th June. So they have next what? 30 days to give me the explanation. But in the next 30 days, they have to give their explanation, comments, cost audit report ka one copy. They have to send it to central government now. Who intimated my details to central government? Board of Directors. Who will send my cost audit report to central government? Board of Directors. After attaching their what? Comments on whatever the modification and reservations I have kept. So we are giving them how many days? 30 days. So 30 days ke andar CRA 4 will go to the central government. Which form will go to the central government? Attaching CRA 3. So CRA 4 goes to the home central government with attachment of what is CRA 3? Cost audit report. Plus attachment of whose report? Board's comments. Whose comments? So these two documents will be attached with what? CRA 4. CRA 4 is going to whom? Central government. Within how many days? 30 days. These 30 days are starting from the day when I handed over my report to the whom? Board of Directors. It means Board of Directors have 30 days to pass the comments as well as to send the report along with their comments to the whom? Central government in form number what? CRA 4. So start reading. What is the next? Board, after receiving the report within what? 30 days, pass comments on modification, reservations, adverse remarks kept by the which auditor, and will forward the cost audit report plus their comments to the central government in form number CRA 4. This is called the total journey of CRA 1 to CRA 4. And this is what do you mean by rule number 5 and rule number 6 actually. So rule number 3, 4, 5, 6 are given in separate chapter. But when we'll read those chapter, you will automatically find if we have already covered that in section number what? 148. So 148 mein 4 rules we have already covered. What are the 4 rules? 3, 4, 5, 6. And let me tell you what is 1. 1 is known as short title and commencement. What is 1? What is the name of this rule? Full name. Company. What is the first word? In the bracket. Cost, records and audit rules. Bracket close, comma 2014. This is called short title. Commenced 30th June 2024. What is the date of commencement? June 2024. That is why the rule number 1 is known as short title and commencement. Short title and commencement. Is it clear? Now short title and commencement. What is rule 2? Definitions. Who is cost auditor? Tell me, who is cost auditor? A qualified practicing CMA holding a valid certificate of practice. What is cost audit? Examination of what? Cost. These definitions are given in rule number 2. Rule number 3, cost required. Rule number 4, rule number 5, appointment. Rule number 6, sending report to the central. So actually those 6 rules and 4 forms also are covered in what? 148. That's why this is a major section you should start your preparation with first. It means this section gives you the, it's a torchbearer section of your next few topics. It will tell you in the next few topics what you are going to do. Did you understand the point? So that brings an end to your topic called rule number 5 and 6. Now tell me the rule number 5 and 6 ka full fledged. Starting se start karte appointment se. Who appointed you? Within by passing a board resolution within 180 days from the commencement of. Then we sent your story. We sent your intimation to whom? Central government. Form number CRA2 within 30 days. Now, if our present cost auditor died or resigned or got what? Removed, then in that case, we will reappoint the new cost auditor filling the casual vacancy by the board of director now within, and from the day we appointed him again within next 30 days, we have to again send form number CRA2 to the central government intimating the details of new cost auditor. Then cost auditor will wait for the financial year to get over. He will start doing his which audit? Cost audit. He will also complete his cost audit within 180 days from the end of the financial year. That is 27th September of the 2027. After that, he will prepare a cost audit report in form number and will issue that report to whom? Board of that. And giving some modifications and reservation and adverse remarks on which who has to pass the comments? Board. And for that, board has how many days? 30 days. Within these 30 days, board has to pass the comments also and send this cost audit report CRA3 attached with what? CRA4 to the home? Central government within how many days? 30. And there is one small amendment in that. Now, what is the amendment? Now, try to understand this. I don't know whether you have an idea or not. Every company has to file annual return under section number 92 and financial statements under section number 137. I hope you know that annual returns ka form number is MGT 7. In the law, though, everywhere exemption will be only given to you if you are not a defaulter in filing MGT 7 and AOC 4. What is AOC stands for? Accounts of companies. So AOC 4 is FS and MGT 7. So let's not go that deep into it. AOC 4 is known as FS copy. Which copy? Try to understand this. Once the AGM is over, within 30 days of AGM, you need to file adopted copy of financial statements to whom? ROC in form number what? AOC 4. This is what section number 137 says. What is 137 says? Within 30 days of AGM, AOC 4 shall be filed with whom? AOC 4 क्या है basically? Now please tell me, AGM में what are the 4 businesses takes place? What happens in AGM? AGM में अड्डा होता है. क्या होता है? अड्डा. What is अड्डा? Appointment of directors. Right or not? Dividend declaration. Am I correct or not? Then appointment of director. Actually, you call it as appointment of auditors. What do we call it as? और यहाँ पे लिख लो directors appointment. And what is the last one? Adoption of what? Financial statements. Adoption of what? Who prepared the financial statement? Management. Who did the audit? Auditor. Now these audited financial statement will be laid down in what? AGM. We need whose approval? Shareholder. By passing OR. What is OR? Ordinary. After that AGM, within the next 30 days, we have to file this adopted and audited financial statement ka copy with whom? ROC in form number AOC 4, section number 137. Did you understand the point? Ab let's say, for example, main point starts from here. 30 days are starting from AGM. 30 days are starting from. Let's say, for example, AGM has not been held. AGM adjourn ho gayi. Or not been held for the want of quorum. What is quorum? Suppose quorum was not present in the AGM. AGM got what? Adjourned. AGM got what? Adjourned. Ab kya kare? Now the AGM got adjourned. What do we do now? Adjourned meeting will be taking place next week, same time, same place. So now try to understand, whenever the AGM gets not held, when AGM is not being held, the company's management has to go to whom? ROC for some extension. What do you get for? Extension. Because last date for AGM is generally 30th September. What is the last date? So 30th September over, your AGM has not been held. Now you are worried that our AGM has not been held. There is a huge penalty. So all these board of directors went to the home. ROC, please give us a what? Extension. ROC can give you maximum 3 months extension. How much? Now let's imagine ROC has given you 45 days extension. How many? It means now 15th November tak you can do what? AGM. Who gave you the extension? No sir, why are you telling all this story? That is what the amendment is. Now try to understand. CRA 4 form number, who is sending to whom? Board of Directors is sending to the central government. CRA 4 attaching CRA 3 plus their comments within these 30 days will be added with the extension provided by ROC in AGM. Let's say, for example, if if the company failed to conduct what? AGM, they went to whom? ROC for the extension. ROC gave 15 days extension. How many days? Now that 30 will become 45. This 30 will become what? 45. Okay, ROC gave 2 months extension. How many months? So 30 days plus 2 months is now the time period you have to send CRA4. So CRA4 का ये जो 30 days वाला time period है, it will get extended if AGM has not been held. What has not been held? And whatever the ROC extension has been given during that AGM, same extended time period will be added to this 30. So tell me, ROC gave me 19 days extension. How many? So this 30 will become 49 days. 30 plus which period? Extended period. In case AGM is not held. That is what the small amendment you have to remember. Are you getting the point or not? So whenever ROC gives you extension for conducting what? AGM, that extended time period plus what? 30 days will be the new time period for sending what? CRA4 to the home? Central. Let me tell you why. अब CRA4 के साथ अपना financial statement का copy भी attach होता है. So if your financial statement copy is not yet filed with the whom? ROC. How you can file the CRA4? Did you get the point or not? So 30. Now read the amendment. If AGM is what? Delayed or what? Postponed. Whatever the extension ROC has given, this extended period shall be added to what? 30 days of what? CRA4. 30 days of what? CRA4. Now that finally makes you understand what 148 section is all about. So this is called cost audit ka structure. What do we call it as? Cost audit. I hope you got the clarity. Now, let me make you understand some things like basics, objectives and social objectives. After that, again, we'll come back to that point. Are you getting the point? Now, 148, why we started? Because you already know what do you mean by the term called 148 and you already have done that twice. Are you getting the point? You have done that in cmainter and again you have done that in CMA final law ke chapter called audit and auditor. So that is kind of a revision for you. But the major thing is we need to understand some basic concepts of the costing first, right? Can you read the first one? What is the first topic we are going to read? Cost accounting standard. Anybody in the class can tell me. I will not take you into the deeper manner. They are not required. This is just for your knowledge purpose. What is the difference between standards and guidance notes? If I have to ask you, standards are also issued by institute. Guidance notes are also issued by whom? Institute. What is the difference between the two? Standards are mandatory statements. Which statement? How many standards do we have? 25. Institute of Cost and Work Accountant is saying what? Ki boss, ye whatever I have written in this standard now, this is a line on a stone. It is a material cost standard CAS 6. What is 6? Material cost. How material costing should be done? Should be done as per this what? Standard. I would not say it should be, it must be done as per this what? Standards. So standards are recommendatory statements or mandatory? Mandatory. Now let me tell you what is guidance notes. Guidance notes are recommendatory. Guidance notes are what? Recommended. Institute bolta you may follow, may not follow. But once the all practicing CMS of India gives their consent to the institute, ki okay sir, this guidance note what you have given to us is eligible to be called as a what? Standard. Now we all are following this guidance only. Then slowly guidance note turns into a what? That's how when I was doing that course, there were hardly 12 standards. But now we have what? 25. It is not that they had 25 already. Are you getting? They had 24 up to your this attempt. They recently added what? Evolution in the standard keeps on what? Coming. As and when practicing CMS, the workload is increasing and the exposure is coming. Those standards are getting added. Those standards are optional statements or mandatory. Can you start reading what is standards given? Standards are the guidelines issued for the whom? Management. Issued for the whom? What is issued for me? CAAS. What is CAS? Cost audit. For me, CAS are there, only 4. It means after getting qualified, you have to follow only what? But sir, why are we doing the 25 standard? Because auditing starts when what ends? You need to be expert in both. What you are going to check? Okay, client is saying this is my material cost. Client is saying this is my water bottle material cost. Which cost? Water bottle material cost. I should know CAS 6 to understand whether the costing done by the client is right or wrong. So I need to be expert in both CAS and CAS. But who has to follow them while preparing cost statement? Management. To read this point, these are the guidelines issued for whom? To prepare and what? Present. Cost records and what? Cost statement. These standards ensure what? Consistency. Stop. What do you mean by consistency? Listen. Tell me one thing. Last year, will I follow the same standards? This year, will I follow the same standards? Next year, will I follow the... This is called what? So that if I'm comparing my 1 year cost statement with the which year? Previous year, it should look same. That is called consistency. And what is the second reason? Can Tata Motors ka costing statement be compared with Mahindra Motors? Yes, it can be compared. Why? Because both belong to the same industry or different. दोनों ने same standard follow करे होंगे. So standard gives you which 2 advantages? Tell me now. Consistency and comparability. And what is the third advantage? Minimum disclosures across what? You have to disclose it as per the standards. So this is what you mean by cost accounting standards. Then cost audit involves what? Quickly read. What does a cost audit involve? It includes verification of which accounts? Cost account. Checking whether you are following your what? Cost accounting plan. Independent. What is the word written? Examination of your which data? That's what the reason. What are the 4 things cost auditor can't do? Statutory audit, GST audit. 4th one, internal. Because if you are a which auditor? Internal. You can't call yourself as what? Independent. So you need to be a which auditor? Independent. Can anybody tell me what do you mean by independent? No family, no financial relationship with the client. No financial relationship and no what? Family. Neither you should be related to your client, nor you should be financially related to your client. Let's say for example, my own wife or only is working in my client's company. If my wife is working in my client's company, tell me, should I accept the audit or should I not? Which relationship? And if I'm holding 40 or say for example, 4,000 shares of my client company, now which relationship? Financial. So neither you should have any family nor should have any. You should be a which examiner? Independent exam. Because you need to express a what? Opinion. Because if you are going to be non-independent, you will not be able to express what? Objective opinion. Next point is what? What is cost accounting auditing standards gives us? Now tell me, accounting is for management. Accounting standards are for? What are these standards? These are for whom? They teach us what? Audit procedure. How should we proceed with our audit? They teach us our and they teach us our report. How do we report? That gives consistency, comparability, minimum disclosure to whom? Company. And it gives me 3 things. What are the 3 things? What are my audit procedures? What are my responsibilities? And what are my what? This one we have already done. Section number what? 148. What is 148? Mandate maintenance of what? Cost record. Can you tell me the rule number? 3. And when the cost audit will be applicable? Rule number 4. Both the things we have learned, 3 and 4. What is cost audit? Can you read now? What is cost audit? Must be done by cost accounted in practice, appointed by, just now we have done, cannot be done by. So who two cannot be the same? Cost auditor can't be the statutory auditor. Statutory auditor can't be a, must comply with what? Cost auditing must comply with what? Cost auditing standards which are issued by institute with the whose approval? In addition to that, we have some extra sections which we are going to cover in section number 140. Is it going inside your head? Next one is what? What do we issue? To whom do we issue? And then board sends to whom? Within how many days? Along with their comments. And can this 30 days be extended? If AGM has been extended. So add those 30, the extended time period to this 30-day. What will happen if we will not follow the standards, or if we will not follow section number 148, we will be penalized under section number. Who will be penalized? Both company and officers, as well as what? Cost auditors. Did you get the point or not? Right? Now take a break, come back. You need 2 breaks or you need 1 break of half an hour. That's your call. How morning happened? Multiple breaks, huh? 1 break only. Take break then. Half an hour break. Hey, don't worry, I'll give you another break also. Go. These are your starting days, so little bit relax. Don't worry. Go. Okay, everyone, shall we start? Okay, so we have understood the genesis, we have understood the history and little bit of background. Along with that, we understood the major core section that is called section number 148. Anyways, we are going to understand about 148 in the further coming topics also. But so far you got a broad idea ki what are the forms we have, what are the rules we have, all that thing, you have an idea. And now let us understand two questions. Now these two questions, why I'm making you understand now. Recently we have seen that in the pattern of CMAD, they have started asking you now direct questions also. Like earlier these were the considered to be irrelevant question, but nowadays they have started asking you the direct question ki what are the social objectives and what are the objectives. So before entering further into the subject, we should first conquer the exact purpose or the objective of doing the which audit? Cost audit. Are you getting the point? Like major purpose for doing the financial statement audit is very simple. We want to give the true and fair view to the users of financial statement. So let's say for example, if you are doing the audit of what? Financial statements. So if you are doing the audit of financial statements, what is the purpose? Financial statement may we check balance sheet, we check what P&L, and we check what cash flow statement, we check statement of changes in equity, we check what notes to accounts. And basically we bring it to the notice of whom? Users, whether these financial statements are giving which view? True and fair way. But that is not the purpose here when it comes to the cost audit. Cost audit may, anyways, we are not making it public. As I told you, cost audit is a very confidential information. We have different kind of objectives in the which audit? Cost audit. Now start reading the objective number 1 and try to interpret it and then make me understand. What is objective number 1 written? Read. To verify the cost accounts with a view to ascertaining if these have been properly what? Maintained. So first objective is very simple. I want to check whether you are properly maintaining the cost accounts and cost records or not. Now tell me, what do you mean by properly maintaining? I will go and check your previous year ka turnover. If the turnover is greater than equals to what? 35 crores. Then what do I expect from you in the current financial year? You should have maintained the which records? Cost records, which are how many in number? 30 in number. As per the format given in form number CRA 1. So what is our first objective? To check. What is the point number 1? To check what? Whether cost accounts and records are properly maintained or not. Are you getting the point? To check whether the cost accounts and cost records are properly maintained or not. What is the next one? Can you read the second one? To ensure that the prescribed procedures of cost accounting records rules are duly what? Adhered to. Now tell me, what is the difference you found between the first and second? The confusing points are there. That's why I'm telling you to focus. Read the first one again. To verify that cost accounts with a view to ascertain whether these have been properly maintained or not. So we are coming to your office to check whether you're maintaining the cost statements and cost accounting and cost records properly or not. The first one is quite easy. What is the second one? To ensure that prescribed procedures of cost accounting records rules are duly what? Whatever the cost accounting rules are being given, have you strictly followed those rules or not? Are you getting the one? Now tell me, what is the rule for intimating the cost auditor details to what do you say, central government? Form number what? CRA2. Within how many days? 30 days. We must appoint the cost auditor within how many days? 180 days. From the commencement of what? Financial year. So all these are known as cost accounting rules or CRA rules, whether properly being followed or not. What is the next one? To detect, not deduct, to detect errors and frauds in the which activities? That will be the objective of both same. Financial audit as well as what? Cost audit. So basically, what kind of frauds and errors you will find it in the cost audit? Maybe excessive cost of production. What do we call it as? Because if there will be excessive cost of production, there will be excessive what? Selling price. Ultimately, the burden will go on the shoulders of whom? Customer. So that is what the major idea behind the government to regulate some sectors. Tell me the regulated sectors. If you carefully see all the 6 regulated sectors, why government chose this sector only to be regulated? Because they are those sectors which are essential commodity sector. Which commodity? Essential commodity. If you'll see that the sugar and petroleum, electricity, drugs and pharma, just imagine if the government will lose the control over these sectors, what will happen? These people who are running these companies will start behaving in an uncontrollable manner, and the cost and the price of the products will go skyrocket. So that's why government wanted to what? Regulate this sector. So we call it as which sectors? Regulated sector. Next one is to verify the cost of each cost unit and cost center to ensure that these have been properly what? Assessed. Now what do you mean by cost unit? Be it, let's say for example, some companies use coal as an input. Some companies use steam as an input. Some companies use, water as an demineralized water as an input. Some companies directly run with what? Power. So we wanted to ensure two things to be properly calculated. What are the two things? Cost unit and what? Cost center. What do you mean by cost center? Cost center means the object or the place where you can trace that cost, or where you can put that cost, or where you can apportion that cost. So majorly, what are the four objectives of doing the cost audit? Tell me. First one, whether your cost accounting and cost records are properly being maintained. What is the rule number two? Are you following the cost rules properly or not? What is the third one? To detect the frauds and errors while doing the which audit? Cost audit in the company's activities. And what is the fourth one? To properly measure the cost unit and properly and accurately measure the what? Cost centers, to ensure that these have been properly what? Ascertained. What is the next one? To facilitate fixing of pricing of what? So ultimately price ka, how the selling price gets determined, tell me? Cost plus profit margin. Higher the cost will be, right or not, higher the selling price will go. So that's why we wanted to bring the cost of production to the optimum level. Which level? So that even if we are adding what? Margin, it should not be an excessive which price? Selling price. And what is the last objective? Periodically reconcile between which accounts and which accounts? I hope you remember you had one chapter yesterday also titled integral and non-integral, where we get some profits as per the which accounts? Financial accounts. We do some additions and deletions, and then we get the profits as per what? These are the normal general 6 objectives of doing a which audit? Cost audit. Tell me the 6 objectives of doing the cost audit. First one is to check that cost records and cost accounts are properly maintained or not. Second one is to check that prescribed procedures which are laid down in rules have been properly followed or not. Third is to detect the frauds and errors in the company ka activity. Fourth one is to ensure that cost unit and cost centers are properly ascertained. अब let's say for example, let me give you the meaning of that. Suppose I have total 40 employees. How many employees? 40. Out of which 10 employees are dedicatedly into a quality inspection activity. Which activity? Now please tell me, if I'm paying the salary to them, where should I add the salary component of these 10 employees? Should I be added in the general salaries and wages or quality control department ka salaries and wages? That is called cost center. That is called which center? Cost center. If I have dedicated one person for marketing, and if I'm paying bonus and gratuity to that person and salary to that person, where should I add the salary of that person? To the finance department or marketing department? Marketing department. That is called cost center. Did you get the point? So we have to check whether the proper cost units and proper cost centers have been ascertained or not. And what is the objective number 5? The objective number 5 is to check that facilitate what? Facilitate fixation of prices of our goods, and the last one is to periodically reconcile your cost accounting with what? Financial accounting. Now these are our which objectives? Normal objectives. Now let us understand what are our these objectives. Which objectives? Social objective. Now this is also repeatedly asked question, social objective. Then we'll move to the main sections again. What is our first social objective? Verify whether the pricing of the products are what? As per the product and quality are concerned. Now try to understand very simple thing. In the market, 2 types of products are available. One are branded and one are what? Non-branded. Are you getting the point? Whose price will be higher? Because why government allows the same shoe price to go 20,000 rupees per pair and another company shoe price not to go beyond 3,000? Why? Because they know they do so many tests on that. Durability test, quality test, survival test, are you a longevity test? Are you getting the point? If you go to a market and buy a pair of Nike shoes, and if you go to a market and buy an unbranded pair of shoes, whose cost will be higher? That is what? it is called justified cost. What do we call? Buying a one pair of Nike shoes and buying the 10 pair of unbranded shoes, the longevity will remain what? Same. Same Nike ka shoe, if you'll use it properly, you can have it for 4-5 years with you. But if you'll buy the unbranded one, you have to keep on changing it after every 6 months or what? 1 year. So what is the first social objective of the government was ki if you are costing this bottle as 60 rupees, is this cost justified or what? Unjustified. That is what the first social objective. Up suppose if this plastic bottle, simple plastic bottle is available in the market for 3000 rupees. How much? 3000. Whereas in DMart, it is available for 60 or 70 rupees per bottle. Now tell me, available for 3000 is justified or unjustified? That is what the objective of doing the which audit? Cost audit. To control the cost of what? Production, so that people should not unjustifiedly increase the cost of production. Read the point number 1 again. Verify whether the pricing of the product, what of the product everyone? Pricing of the product are what? Justified as per the product and what? Quality concern. Okay, you give me the best quality, I'm ready to pay 3000 also. But if you're giving me a normal plastic quality, I will not be interested in paying you more than 60 or 70 rupees per bottle. So cost justification. What is our first objective? Cost justification. Now cost will be justified according to what? According to product and according to its what? Quality. You give me the good product, you give me the good quality, I'm ready to pay you 3000 rupees per product also. So that is called cost justification. What is the first? Cost. Don't use that word in normal objectives. Read the question carefully. Are they asking the general objectives of cost audit or they are asking you what? Social objective. What is the next one? Social objective. Read the next one, please. Removing the disparities, if any, in the pricing of what? Products and services. What is the second thing they wanted to do? What do you mean by disparity? Differences between the products and what? Services. So if this same product is available in Hyderabad at X price, the same should be available at somewhere else also what? At X price only. So we don't want the differentiation in what? Pricing of the products and what? Services. So repeat the point number 2 again. To remove what? What are we trying to remove? Disparities. What do you mean by disparities? Differences in the pricing of the product and pricing of what? Services. Are you getting the point? So tell me the two cost objectives. Social objectives of cost audit. One is cost justification and second one is to remove what? Main is keyword. I can understand you cannot reproduce the same answer in the examination. Main word is keywords. What are the keywords? First one mein cost, justification and price disparity. What is the first word? Price disparity. Read the next one. Looking into that कि no cost based economic imbalance may occur in what? Product or what? Services. Now you might have seen that कि some of the products actually available in the world which needs some kind of raw material which are very rare in the market. I hope you remember, if we'll see the companies like Louis Vuitton, LV or Gucci and all, you might have seen that their bags are quite costly, costing around 2.5 lakhs to 5 lakhs or 10 lakhs or 20 lakhs worth of bag. Now LV ka one bag is there which is going to cost you 4.5 lakhs. I think we shared that example in earlier case, no? So LV ka bag is there 4.5 lakh rupees. But to manufacture that bag, we have to kill 4 crocodiles in total to ensure that one bag is manufactured, because the design is made in such a manner that different body parts of the crocodile skin are required to be pasted on that bag in the form of leather. So to manufacture that bag, we need to kill what? 4 crocodiles. Are you getting the point? That's why the pricing of the bag goes what? Very high. But those who buy those bags, they are not able to understand how much nature is getting burdened due to one demand of that bag. It means single bag is costing the lives of what? 4 crocodiles. Are you understanding? Is it a justified pricing or unjustified? Unjustified. But the problem is that in across the world, people are there who are demanding such kind of what? Products. And due to the increase in what? Demand, supply has to be what? Met. And to meet the supply, they have to do all those things. So what the government wanted to curb those kind of activities, to stop those kind of what? Activity. That's why what is the topic name we are doing? Social objective. Which objective? So read the point number 3 again. Looking into that no cost based economic imbalance may occur in what? Product or what? Services. Now let's say for example, just you can see the example. We have done one concept in our law also called sustainability. What is the concept of sustainability? Ki we should try and use our resources, natural resources in such a manner as a which generation? Present generation, so that we can keep something preserved for our which generation? Future generation. That is what again the social objective behind regulating the costing of products and what? Services. That is what is there in the third one. And read the fourth one, please. Facilitating the which market? Global market cost competitiveness of the what? Products. Ensuring that efficient utilization of what? Resources. What was the reason that before COVID, India made 90% of the things were imported? And that too, who was a country which we were importing from? China. Actually, if I have to tell you the fact, the world's largest producer is what? China. And world's largest consumer is India. Whatever China manufactures, the biggest, now both are densely populated country. They are manufacturer and we are what? Consumer. But that was the scenario before 2020, before COVID. So whatever the China was manufacturing, they were dumping into what? India. Same product, same this, let's take an example of this remote. If this remote is available in India for 400 rupees, same remote in China, you are able to get import with the cost of 150 only. So as a dealer, which one is costing me less? Manufacturing in India or importing from China? So what we started doing, we started becoming too much dependent on what? Imports. And tell me what happens when the imports are more? Foreign exchange reserves will go up or down. That was actually not healthy for the government's balance of payments and balance of trades. Are you getting the point? So that's why they wanted to bring this also. Okay, that's the reason Make in India concept was introduced. What was that? We have done one chapter called MSME also. What is the reason behind? I told you that this chapter is being added in your portion because that is the second largest sector after agriculture, which is contributing to the India's GDP. 40% of India's gross domestic product income is coming from the which sector? MSME sector. And why government is now pushing that sector again and again? Why? Because we have stopped importing the goods. We have started manufacturing it. Government is pushing the small industries to come forward and do the more production of goods and services so that we can reduce our what? And read the last point again. Well, that is what is written in the last line. Read. Facilitating in the global market cost competitiveness. What do we want? Cost competitiveness of the what? Products. Ensuring the efficient utilization of what? Resources. Acha, what do you think that why every developed nation has their center in India? Tell me, what is the reason that we have Oracle, we have Microsoft, we have IBM, we have Deloitte? Every bloody company ka call center and every bloody company ka one office is there in India. What is the reason? Cheap labor and cheap availability of raw material. But Indians don't know that. They know that it is cheaply available in what? India. Same person for the telecaller whom they are paying in Indian rupees, if they will hire the same of their national citizenship, they have to pay it in dollars. And you know that $1 is equivalent to 95 rupees in India. So where there cheap availability of labor? China and India. That's why majority of the IT sectors have opened their centers in what? India and China. But Indians were so habitual of importing the goods that they didn't realize that cheap availability of raw material and labor can be used by Indian manufacturers as well. So that's the reason these are the four basic purposes why we needed to introduce a which audit? Cost audit. So tell me, what is the purpose number one? Cost justification. What is the purpose number two? Removing the price disparities. What is the purpose number three? We should have a good economic importance. And what is the purpose number four? We wanted to have a global price competitiveness or global cost what? Competitiveness. So these were the social objectives and those were the what? General objectives of doing the which audit? Cost audit. One of the two topics you will generally find repeatedly being coming in the examination, be it the general objectives or be it the what? Right? Now let's understand next topic for the today. What is the next topic? Now we have in our basics of cost audit chapter. Can you read the heading? What is the heading? Powers, duties, rights, disqualifications, everything of a what? Cost auditor. But what is being written? They are quite similar as which auditor? Financial auditor. Let me give you a very simple example to make you understand. I already told you that section number 139 to section number 147 is dedicated section for which auditor? Statutory. We only have one dedicated section called 148. Secretarial auditor has one dedicated section called 204. Now, Institute what has done, so ICAI and ICMAI has collaborated into some section. They said that some sections which you have read in company audit chapter, out of that, some are equally applicable to statutory auditor as well as what? Cost audit. It means from 139 to 147. Some sections are equally applicable to which auditor? Cost auditor. Out of that, the very first thing which we need to understand later on, but before that, let me tell you the removal section which makes it different from what? Cost auditor or statutory auditor. Can anybody in the class tell me how statutory auditor is removed? First of all, statutory auditor can be removed by members. Who appointed them? So who can remove them? And the second person who can remove them is known as what? NCLT. I hope you remember. But do you remember what is the reason when members come into picture and one NCLT comes into the picture? Tell me one thing. I am a chartered accountant in practice. I am some company's statutory auditor and they want to remove me before the expiry of my term. Tell me, what is my term, by the way? One term of 5 years if I'm a sole proprietor, and if I'm a partnership firm or LLP, 2 terms of 5 years each. That we already understood in company audit. Now they want to remove me before 5 or before 10 years. What is the procedure? When the members can remove me and when the what? NCLT. Members remove you if they have the problem with your what? Performance. They did not like your way of doing the audit. You are not matching their expectations. So they have a problem with your what? Performance. Who will come into the picture? Member. But I hope that when the members comes into the picture, you know that we give OBH to them. What is OBH? Opportunity of being. Then we have the members criteria. We'll conduct a what? EGM, and the EGM will pass a what? Special resolution, and auditor stands removed. Are you getting the point? Now NCLT when come into the picture? When auditor is involved in the which activity? Fraudulent activity. If you feel that the auditor has helped the company in doing the fraud, or someone was doing the fraud, who helped that? Auditor. In such cases, what will happen? NCLT. But NCLT के case में no opportunity of being heard. Directly you will be removed. This is a removal criteria of which auditor? Now think logically. We are going to remove cost auditor. Who appointed me? Bypassing in a which meeting? Same removal process. Board will conduct a which meeting? Will pass and they can remove me before the expiry of my term. Are you getting the point? But in this case, will get opportunity of being heard. So what is the removal process? By the whom? Board of directors. After giving what? By the way of passing the which resolution. So how we got appointed is the same manner how we get what? Removed as a which auditor? Cost auditor. Now let's understand exemption list of what? Section number 148. Tell me one thing. 148 may we read rule number 3 and 4. 3 was cost records. 4 was cost audit and cost records. Both are not applicable to SM. Both are not applicable to. But now we are not going to talk about cost records. We are only going to talk about exemptions from which audit? Cost audit. Now let's say for example, you are from regulated sector and you are from non-regulated sector. Regulated sector ka 2 conditions, 50 and 25 CR, and unregulated ka 2 condition, 100 and 35, greater than equals to that. That you already aware. Suppose you are already meeting that criteria, but you will not get audited if you are operating from SEZ zone. What is SEZ? Special economic zone. So if your factory, if your manufacturing unit is in special economic zone, be it from regulated sector or be it from, you are 100% exempted, not from cost records, only from cost. Cost records से एक ही बंदा exempted है, SME. Cost audit में 5 people are exempted. So cost record में 1 person is exempted, cost audit में 5 people. Out of that 5, who is the first person? A company which is operating from which zone? Special economic zone. Second one, if you are a small and medium enterprise, that we already aware. So tell me, who are the 2 who are exempted from cost audit? SEZ operating unit, and SME. Who is the third one? 100% export oriented undertaking. What do you mean by 100% EOU? What do you mean? Whatever you are manufacturing, you are exporting. Not even a single domestic sale. But when you are 100% exporting, how payments you are getting? In which currency? Foreign currency. Are you increasing the foreign reserve of India? So you are exempted. So tell me, who three are exempted? SME enterprises exempted, operating from SEZ exempted, and 100% EOU. But if you are a more than 75% EOU, you can also get a what? Exemption. What is the difference between that? Whatever I am manufacturing, if more than 75% I'm doing exports, if more than 75% I'm doing exports, am I still getting the payment in which currency? So then also I'm exempted. But remember, it is not greater than equals to 75. It should be more than what? 75. Exactly 75% export sales will not get what? Exemption. Tell me the four. Operating from SEZ zone, SME, 100% EOU, more than 75% of your total turnover is coming in which currency? Foreign currency. Means what? More than 75% EOU, you can say. And who is the last one? The last one is those companies who are having their own what? Power plant. And not only they're having their own power plant, they're manufacturing the power and they're using that power for their which consumption? They are doing their production also with their own power. Now government logic is that you are a self-sufficient company. Which company? You are also what? Exempted. So these five entities are exempted from which audit? Cost audit. Who are the five entities? 100% export oriented, operating from SEZ. If you are a SME, if you are more than 75% of EOU and more than 75% of the turnover is coming in which currency? Foreign. And if you are a company having your own power plant and not only you are generating the power, you are using that power also for your which consumption? Captive consumption. Or sometimes if you have excessive power, you can sell it to the government also. Are you getting the point? The government gives you grant and subsidy, but in the name of grant and subsidy, they have exempted you from which audit? Cost audit. So these five entities need not go through section number 148 ka which audit? Cost audit. Are you getting the point? Now, what is the next thing you need to understand? Acha, you all know that Companies Act 2013 replaced the Companies Act what? 1956. Do you remember CRA rules were first framed in 2011, then changed to 2014. But when the 2014 came, government made some rule. Why? Because what happens when you shift from one act to another act? Always remember, we call it as transition period. What do we call? Because you are habitual in the old act, and now suddenly from the old act you are coming to a new act. So government did the same thing in CRA rules also. So when the Companies Act 1956 got changed to what? Companies Act 2013, to some entities government said ki boss, for you cost records are applicable from which date? 1st April 2014. The day on the Companies Act 2013 is applicable, from the same day cost records are applicable to you. That is from the which day? 1st April 2014. But to some entities, government said, for you, it is applicable from 1st April 2015 onward. 1 year deferred. Are you getting the point or not? So tell me, to some entities, cost records are applicable from 1/4/2014. To some entities, cost records are applicable from 1 year deferment. So you have to read the second list if you want to know the first list. Are you getting the point? What is the second list? Read the list. This is exhaustive list. Which entities got covered? Anyways, we are going to do that again in rule number 5. Read the entity number 1. Coffee and tea. Tell me, regulated or unregulated? Unregulated. Next one. Insecticides, plastic and polymers, tires and tubes, pulp and paper, textile, glass, other machine and mechanical appliances, electronic and electricals machinery. If you are belonging to any of these entities, you were required to apply the cost records from 1/4/2015. Not like others who have already covered under the cost records from 1/4/2014. Now, if I have to ask you, fertilizer, 1/4/2000, sugar. What is not written here is from when? 1/4/2014. What is written here is from pulp, rubber, plastic, tea, coffee, milk powder, pesticides. 2014. Insecticides, electricals, machineries, aerospace. Did you understand how they may ask you the question? So you have to remember this exhaustive list. If you'll remember this exhaustive list, it means you know all those companies whose cost records are applicable from 1/4/2015, not from 1/4/2014. Did you understand? So this is called cost records applicability. What do we call it as? Cost records applicability. Now, what is the next thing you need to understand? Small topics are there. Now, please tell me, do you remember yesterday I told you one procedure ki how our audit starts? Are you getting the point? How our audit starts. Now tell me, what is a preliminary step I told you yesterday? How our audit starts? First, client gives us a what? Proposal. We send a what? Audit engagement letter to the home client, giving my terms and. Now we are at that stage now to understand this topic. Now, whenever you send the audit engagement letter to your client before being appointed as a which auditor? Cost auditor, there are some declarations you have to give to the client in writing on your letterhead. Whose letterhead? Cost auditor's letterhead. So my office letterhead I'll take and I'll give some declarations to the client. Can you read the declaration number 1? If I'm a sole proprietor, it means I'm an individual. Or if I'm a partnership firm or LLP, I'm a firm. I am not disqualified under section number 141. How many of you remember disqualifications? First of all, tell me, in how many ways you can practice in India? 3 ways. Either in the form of sole proprietor or partnership firm or LLP. Can you open a company of practicing chartered accountants? No. You can't open ABC Associates Limited. You can open ABC Associates, ABC and Co, ABC Associate Cost Accountant. Like that, you can open sole proprietor, partnership firm or LLP. If you are opening a what? Company, are you qualified to be auditor in India or disqualified? So who is giving this declaration? Cost auditor is telling to the home client, ki boss, once you are appointing me, I'm not disqualified under section number 141. We have those disqualification, but we'll read it at the later stage. Can you read the second one, what I'm saying? My individual or my firm is qualified to be your what? We all are what holders? COP holders. What is COP? Certificate of Practice. So declaration number 1, we are not disqualified under section number. We are qualified cost auditors because we are holding a what? COP. Next one, we are qualified to accept this what? Cost audit as it is within our limits of doing what? Let me tell you one thing. Actually, there is no ceiling limit of doing what? Cost audit. Because we are already very less in the market. But we do have a ceiling limit, statutory. So this point has been copy pasted from which audit? Statutory. Can anybody in the class tell me what is your statutory audit ka company ceiling limit? 20 per practicing CA per financial year. You cannot do more than 20 company audits in one financial year as a one practicing chartered accountant. The same declaration we are also giving to the client. What is the third declaration? After accepting your audit, I'm not breaching my which limit? Ceiling limit. So tell me why 3 declarations? We are not disqualified. We are qualified because we are the COP holders. And third, we are not breaching our which limit? Read the last one and make me understand what they are saying. Me, my firm or my partners are not having any pending cases or litigations in any statutory authority, in any court, either in India or what? We are a clean firm. None of my partner, none of my firm or me is having any pending cases either in any income tax department, GST department, custom department, ED, that is called statutory authority, nor we have any case pending in our court. Either the court is in India or court where? Outside India. We are the clean firm. We are the which firm? Clean firm. Did you get the point? So these are the 4 declarations you have to give before accepting the which audit? Cost audit. Now finally your section number 148 is over. So tell me, exemption list. Exemption from cost records, exemption from cost audit. From cost records, we have only one, that is called SME, small and medium. And from the cost audit, we have 5. Operating from SEZ, 100% EOU, more than 75% of your turnover is coming in which currency? Foreign currency. Then small, medium enterprise and having your own power plant and using that power for which consumption? Tell me the 4 declarations you give before accepting the cost audit. We are not disqualified under section number 141, which is our next topic. Second, we are qualified cost auditors because we all are holding what? COP. Third, we are not breaching our what? Ceiling limit. Fourth, me, my partner and my firm, none of us have any kind of pending cases in any statutory authority or court in India or outside India. Are you getting the point? Next one, tell me what is the cost audit limit for regulated sector? When do we check the turnover? Preceding. I am a regulated sector. Tell me, 1 condition or 2 conditions? Both of them to be satisfied or one of them? Tell me the condition. Overall annual turnover from the manufacturing or production of goods and services should be greater than equals to 50 crores and turnover of such goods and services which we manufactured for which cost records are required to be maintained, that should also be greater than equals to what? And the same limit is 100 crores or more or and 35 crores or more in case of which sector? Are you getting the point? Who appoints us? When? From the commencement of financial. Are you getting the point? So what will be the probable last date? 27 September every year. If the audit is taking place every year, then 27 September. Who is intimating my details to whom? Intimating in form number to the within 30 days. Resigned, died or removed. Casual vacancy. Who will fill up again? Within, again intimate. Inform number within 30 days. Okay, next one. How to complete the audit? Within how many days? From the end of the financial year. Within those 180 days, do I have to prepare my cost audit report? That cost audit report I have to give it to Board of Directors. Form number. And how many days board has to pass their comments on my reservation? And their comments and my report attached with CRA4 will go to whom? Within these 30 days will get extended if the ROC has given you any extension for non-holding of what? AGM. 100% clarity. Sure. Up to this point, any doubt or no doubt? Now, I'm not going to take you to the cost records because once we'll read the list of cost records, I will take you to the cost records then. Now, let's understand the very important section today, that is called section number 140. Let me do one thing. Let me complete some small sections first before starting what? 141. Okay, 141 mein total 11 disqualifications are there. How many? 11. And let's first do section number what? 140. Okay. Tell me one thing. What is the difference between getting removed and giving resignation? You are getting removed by board, but you are giving resignation voluntarily. You are giving resignation what? Voluntarily. Whenever you are giving the resignation, as per section number 140, what they are saying, your duty is to what? Intimate the reasons of your what? Resignation to the company as well as to the home. Within how many days? In form number what? Why? You are leaving. You simply leave, give the resignation. Why do you need to intimate the reasons? Understand one thing. Once you leave, you are an outgoing auditor. Which auditor? After you, somebody will come as an incoming auditor. The incoming auditor would like to read your reasons why you left. If he feels that the reasons are what? Genuine. And I should not accept this what? Audit. That is the basic purpose why we give the reasons of what? Resignation. Let's say for example, I wanted to give a negative report. Which report? on the company's cost records. But company is forcing me, no, you have to give us a positive report only. We will not allow you. मैंने कहा, sir, I can't work in this kind of pressurized environment. I'm resigning. Now, once you are resigning, you also have to give the reasons of what? Resignation. Now, please tell me, now suppose he's the incoming auditor. Which auditor? I am the which auditor? Outgoing. Did I give the reasons? Once he will join the company, he will read my what? Reasons. And what is the reason I left? I was being pressurized to convert my negative cost audit report into what? Which I was willing to do or unwilling to. That's why I resigned. Now tell me, if that pressure can be on me, is there a possibility same pressure can be on you? That's the reason we give the reasons of what? Resignation. In form number what? ADT3. Did you get the point? Within how many days? Within 30 days. You can't leave without giving the reasons of what? Resignation. And the form for giving the reason is ADT3. Let's say, for example, you left the company without giving reasons of resignation. So what is your penalty? Read the penalty. 50,000 rupees flat, or your remuneration received, whichever is lower, plus how many days we have to give the reason of resignation? 30. From 31st day onwards, per day fine is how much? And this total penalty put together shall not exceed what? 2 lakhs. So tell me how you will calculate if this practical question will come. I resigned as a cost auditor and I gave my reasons of resignation on 67th day after resigning. How many days? 67th day, and my remuneration was 8 lakh rupees. So remuneration or 50,000, whichever is lower. What is my remuneration? Or 50,000, whichever is lower. So 50,000 plus how many extra days I took? 37. Per day ka how much? 500. So 37 into 500 makes it to 18,500. So 18,500 plus what? Put together shall not be more than what? 2 lakhs. If I fail to give the reason, that flat penalty plus per day penalty put together shall not be more than what? 2 lakhs. If you fail to give the reason of what? Resignation. And removal ka process is very simple. Removal mein this problem is not there. What is the difference between resignation and removal? Resignation mein I am leaving voluntarily. Removal mein who is throwing you out? What are the 3 points? By board, by passing, by after giving opportunity of being heard. That we already know. So this is called RR section, resignation and removal section. For the which auditor? Cost auditor. There is no big process like statutory auditor. Cost auditor removal is very simple. Did you get the point? This is called the removal section for what? Cost auditor. Now let's understand one very small section of company audit. That is called section number 142. This is called remuneration of cost auditor. Which auditor? Can you read both the side? What is being written? If my company has a which committee, or if my company does not have a what? Audit. The company in which I am getting appointed as a which auditor? Cost auditor. Audit committee, section number 177. Do you remember audit committee is the one which gives omnibus approval for your related party transaction? What are the major powers of audit committee? They recommend the appointment, engagement terms and remuneration of auditors. Are you getting the point? If my client is having a which committee? 3 processes are there. Process number 1. I will be recommended by audit committee, but appointed by and later on ratified by whom? Shareholder. 3 people are involved. Appointed by, recommended by, appointed by, rectification by. What do you mean by that? If the shareholders did not like my appointment, which is done by whom? So they can throw me out. It means my final appointment will get validated when? Shareholders approve. But sir, you to said that only board of director. That's what I'm telling you. When audit committee is involved, which is involved? So us case mein audit committee has to take care of its shareholder. What if one of the shareholder raises objection? He is a relative. Tell me, cost auditor should be independent examiner or dependent examiner? What if I'm a relative of CEO of the company and I have been appointed as a cost auditor? Do you think that shareholders will allow a dependent person to do the cost audit, or they want independent? Independent. So it can be ratified or rectified by whom? Shareholder. But what if my company does not have any audit committee? Both recommendation and approval by whom? Who is not there in the company? So both recommendation and approval by whom? Board of director. Later on can be ratified by whom? That brings an end to your another small section called what? 142. So tell me, what is the provision of 140 and 142? 141 we are yet to do. What is 140? Why we are not doing 139? Tell me. 139 is appointment of statutory auditor. How many sections I told you for statutory auditor? 139 to 147. 139 is dedicated section for whom? There is no cost auditor, but 140, 141, 142, 143 are equally applicable to. That's why we are doing those sections. 139 we are not doing. We did 148. Now just now we have done 140, resignation and removal. And now we are doing what? 142, remuneration. Did you get the point or not? Now let's come back to section number what? 141. What is 141? Now 141 ki first disqualification, I think you already agree with me. What is the disqualification? What are the three ways you are qualified in India? Individual sole proprietor, partnership firm, LLP. What you are not allowed? Except what? Why this word is written? Because LLP is in the definition of what? Body corporate. So we are not allowed to. We are first disqualification is India mein you can't operate in the form of what? Body corporate. You can't operate in the form of what? Company. Except what? LLP. LLP allowed or not allowed? Allowed. Can you read the second one? Similar. You should not be the what? Officer or employee of your what? Client company. What do you mean by officer and employee? Okay. So this is your AB Associates. Is a practicing CMA firm. What is the name of the firm? AB Associate. So A and B both are practicing CMAs, right? Now A is the EP. What is EP? I told you? Engagement partner. Who is going to take care of the audit of XYZ Limited, which is one of the manufacturing company, right? Now B is working there as a finance manager in that XYZ Limited, whose audit you have received. Did you understand? AB and Associates are the cost auditors of whom? XYZ Limited. They are the cost auditor of which company? XYZ. Out of A and B, who took the responsibility to do the cost audit? A. So A is a which partner? Engage. B is not at all connected with this audit. Is not at all connected with this audit. He is taking care of another audits, right? But B is also working as an employee in XYZ Limited in the post of finance manager. So tell me, are we qualified or we are disqualified? Why? Because B is not the engagement partner, but B is the partner of A. And appointment letter comes in firm's name or individual's name. And firm belongs to both of them. Is one of my partner is also an employee in my client company? So the whole firm will be what? Disqualified. So what are the two positions you have to avoid in your client company? One is you should not be the officer. Another one is you should not be the employee. Employment wala example you understood? What is the definition of officer? You should not be the KMP of the client plus directors. What is KMP? That I know. Thank you. What is KMP? CEO, CFO, MD, manager, whole-time director, CS plus director. These 7 positions and employment is allowed or prohibited? In which company? Client company, holding, subsidiary, associate, brother or sister company also. What do you mean by that? I am the engagement partner of Reliance Industries Limited. Listen, I am the engagement partner of, we are doing the audit of Reliance Industries Limited as a cost auditor, right? My partner is an employee in Geo Communications Limited. We are the auditors of Reliance Industries Limited, but my partner is an employee in Geo Communications Limited. What is Geo Communications Limited? Is a subsidiary of Reliance Industries Limited. Are we in the family group? I am doing the audit of Reliance, but one of my partner is the employee in the which company? And Geo is a of what? Reliance. Our whole firm is what? Disqualified. What if Geo is a holding of Reliance? Disqualified. What if Geo is the associate of my client? Disqualified. And what if Geo is a sister or brotherly concern of my client? Disqualified. So where are the 5 places you are disqualified? Main company, no officer, no employment. Holding company, no officer, no employment. Subsidiary company, no officer, no employment. Associate, no officer, no employment. Brother and sister company. Okay, we are the auditors of Reliance Industries Limited. We are the auditors of Reliance. And my partner is an employee in XYZ Limited. Which limited? That XYZ Limited and this Reliance has a common parent. We are the auditors of Reliance. My partner is an employee in XYZ Limited. Reliance and XYZ Limited are both the child of common parent company. Are we qualified or disqualified? Okay, now this Reliance and XYZ became what? Brother or sister company. Did you get the point? So what are the 5 places you are disqualified? Company, its holding, its subsidiary, its associate, its brother and sister company. Which 2 things you need to avoid? Officer position, employer. Who has to avoid? You and your partner, both. Otherwise, whole firm will be disqualified. Did you understand the point? Now, can you read the next one? What is the next one? And try to tell me how it is different from the second one. Read it. Take your time. Read the third one. And try to tell me how it is different from the second one. You are in employment and you are in partnership. With whom? How it is different from second one? Second may you were officer and employee. Third may you are not, your partner is not officer and employee. You entered into an agreement of employment or agreement of partnership with someone who is the officer or employee. So which one is a direct disqualification? Second one. Which one is indirect? So now here, out of A, B, A is an engagement partner. A is a which partner? B is the non-engagement partner. Am I correct? We both are the auditors of XYZ Limited. XYZ Limited mein, there is one person called Mukesh who is the CEO of this company. What is his designation? CEO. Mukesh has one partnership firm. Mukesh has one personal business in which my partner B is also a partner. Did you now understand the meaning of the third line? Is my partner directly officer and employee in my client company or indirectly? How? He entered into partnership with whom? Someone who is an officer and employee of my which company? Client company. Who is the officer and employee of my client company? Is Mr. Mukesh. Am I correct or not? And he has a partnership firm in which my partner is also a what? Partner. Tell me how it will disqualify you. We understood it is disqualified, but why? If A is trying to give a negative report on the which company? XYZ. Will that impact CEO? CEO is a partner of mine. My partner. Will he influence my partner? My partner may influence me. My professional judgment may get compromised. So they are saying second May you are directly disqualified and third May you are indirectly also disqualified. So tell me what is 1, 2, 3 disqualification? Body corporate company directly what? Disqualified except what? LLE. You and your partner should not be the officer or employee in the client company, holding, subsidiary, associate, brother and sister company. You are immediately what? Disqualified. You and your partner should not enter into employment agreement or partnership agreement with someone who is officer or employee of your which company? Client company, holding, subsidiary, associate, brother and sister. ये जो company वाला 5 points है ना, that will come in every point. Did you understand 3 disqualifications? Are you getting the point? Now from the 4th disqualification onwards, your relative will also be included. Who will be included? Okay, try to tell me who was included up to point number 2 and 3. Point number 2 में you and your what? Partner. From now onwards, who are also going to add? You, your partner and your what? Relative. Now listen to this point. Any 3 of you have this relationship with the client, my firm will be what? Disqualified. Now read this point. If me or my partner hold any security. What do you mean by the word any? Equity, preference, debentures, bond, commercial paper. Any kind of what? Financial instrument. Of which value? Any value. Even a single paisa value will make my whole firm immediately what? Disqualified. Relative is not yet added. Relative ka point I think you already know. Me or my partner hold any security. Of which value? Any value. In which company? Our firm is immediately. Moral of the story, you can't hold any securities in your client's company. Neither by you. No extension, immediately what? Disqualified. But I hope some of you know about the relatives. Relatives ka limit is up to rupees. Of which value? 1 lakh of face value, market value. You will be disqualified when? If they breach more than what? 1 lakh. But attract after what? What do you mean by that? If my relatives are holding the security, neither me nor my partner, my partner's wife is holding the shares worth rupees 90,000 face value, whose market value is 3 crores in my client's company. Qualified or disqualified? 99,000 qualified. Exactly 1 lakh face value. Qualified. 1 lakh 1 rupee disqualified. But this disqualification immediately will attract. Afterward, why lawmaker is giving us 60 days? To correct that level of more than 1 lakh, to bring it down to what? 1 lakh. So in me and my partner's case, what is the disqualification? Immediately. But in relatives ke case, after how many days? 60 days. Relative ka definition, I hope you know. They are the 14 people. Who are the 14 people? Here are relative ka definition. What is a relative ka definition? You are to already covered. You are what? Spouse, mother, stepmother, father, stepfather, brother, stepbrother, sister, stepsister, son, stepson, son's wife, not stepson's wife, son's wife, daughter, no stepdaughter, directly daughter's ka husband. How many people are there? 14. Tell me, how will you remember? Yaad hai apni action? Spouse, inside, mother, father, always above, including stepmother, stepfather. Parallel to you, brother and sister. Down to you, son, daughter, stepson, and son's wife, daughter, daughter's husband. They all, acha, is this 1 lakh ka limit? Is for one relative? Acha, wife, my partner's wife is holding 50,000 worth of face value of the shares. Partner's brother is holding 60,000. But they both are holding less than 1 lakh each. We have to take what? Combine. It is not relative limit. It is relatives. All put together should not exceed what? 100. Otherwise, what he will do? 99,999. You hold, you hold, you hold. He will keep on holding. Are you getting enough? To put together, it should not be more than 1 lakh. Is it clear? Now, last time, tell me, what are the 4 disqualifications we have? Body corporate, company, except LLP. You and your partner should not be the officer and employee. Third, simplify. You and your partner should not enter into employment contract or partnership contract with officer or employee of your client company, including those group companies. Fourth, mein, you fourth onwards, you, your partner, and your relative. Three people are coming. First, talk about you and your partner. You and your partner should not be holding any security of any value. Then you will be immediately what? Disqualified. But in relatives के case में limit is up to rupees 1 lakh. Limit is up to rupees of which value? Face value. More than 1 lakh, disqualification will attract, but not what? Immediately. It will attract after what? 60 days. Did you get the point? What is the disqualification number 5? Again, 3 people are included. You, your partner, and your relative. What is the word written? Indebtedness for what? Exceeding what? इसका meaning बताओ. If me or my partner or my relative have bought goods and services from our client on credit basis. On which basis? Are we indebted to the client? And the invoice value is more than 5 lakh. My whole firm will be what? It means law does not have a problem till 5 lakhs. 5 lakh 1 rupee or 1 paisa will make you what? Disqualified. I think some of you might be knowing the answer for that question also. So let's say, for example, my partner's brother, who? Because I will not give you the common example. My partner's brother, is he included in relative? So my partner's brother wanted 8 air conditioners. How many? Do you remember this example? And we bought it from Bajaj Electronics. Which electronic? And Bajaj Electronic is my is my client. Are you getting now? We bought it from Bajaj Electronics. So each AC is costing 1 lakh rupees each. What is the cost of each AC? 1 lakh. So what is the billing amount? We are doing the audit of Bajaj Electronics. Bajaj Electronics has to give us audit fees of 8 lakh rupees. They were about to give us the audit fees of what? 8 lakhs. We have to pay them how much? So we said that it is set off. You owe us 8 lakhs. We owe you. Now tell me, are we qualified or disqualified? Did you understand the question? How much we are about to receive? How much we have to pay to the Bajaj Electronic? Is he my client or not? Who bought the ACs? My partner's brother, relative included. So tell me, is this a clear-cut case of disqualification or we are qualified because null payment has to be made now? 8 lakhs आने का है, 8 lakhs देने का है. It is nullified with zero amount. Are we qualified or we are disqualified? Qualified. We are not indebted. Why, Amma? Why we are not indebted? But did you receive or you will receive? You received or you will receive. So when your audit fees will become due, till that time, how you will be shown in Bajaj Electronics ka books of accounts? Tell me. Tell me, what is the month going on? I got appointed on 10 June, say for example. I got appointed on 10 June. For which financial year? 26, 27. When will I start doing audit? After 31st March 27. So when my audit fees will become due? After 31st March. Am I correct or not? Till that time, how they will show me in their books of accounts? Letter of how many lakhs? Letter of 8 lakhs. Till which March? 31st March. 1st April se what will start? Audit. Can anybody tell me what will be the adjustment entry they will pass? Audit fees account debited 8 lakhs to debtors 8 lakhs. Will they nullify? What they debited? Audit fees. What they credited? Me as a debtor. But till 31st March, how I was shown, even for a single second, If you come to your client's books of accounts as a debtor for more than what? You are immediately. What was the invoice value? 8 lakhs. Are you getting the point? Even though it will be nullified, but it will be nullified when the audit fees will become due, not today. So we are disqualified, even if this kind of question will come in the examination. Did you get the point? Did you understand? Will your answer change if we bought 5 ACs? Billing value? Now, are we disqualified or qualified? So up to which limit we are qualified? ये word याद कर लो. What are the two words? Goods. You bought goods and services from your client and you're indebted even for a single second in his books of accounts for more than what? You are immediately. Doesn't matter you will set it off later. But did you come in their books as a debtor? That is more than enough to disqualify you. Sir, who is saying this? Lawmaker is saying this. Now, will your answer change? Let's say, for example, same question. Now, we did not go to my client's place for buying an AC. So, it was a medical emergency. Which emergency? I had a medical emergency. So, I wanted 20 lakh rupees from the client. How much? मैंने बजाज इलेक्ट्रॉनिक्स को कॉल किया, सर कैन यू ट्रांसफर 20 lakhs to my account today only, 30th June, and we got appointed on 10 July. Every fact is same. So they immediately transferred 20 lakh rupees to my account. Are you getting the point? Are we qualified or disqualified? And my audit fees is also 20 lakhs. So I told him, give me the advance audit fees. Did we start audit? When it will be started? Till that time, how they will show me? As a debtor. Wrong accounting. Debtor you call when? Did they sell me any goods and service? They will show me as what? Think logically. Loan to Grover and Associate. How they will show me? How much? 20 lakh. Till which March? 31st March. Is loan and debtor same thing? When do you call indebtedness? What are the two words I told you? Goods and... Did I buy any goods and services or took an advance audit fees? You are qualified. When you are disqualified, when you are indebted. So now also I was indebted, but indebted for what? What is the difference in the first example and this example? In the first example, I was buying 8 air conditioner. Was it the goods and service? Now, did I buy air conditions or did I take a advance audit fees? Hence, you are qualified. You are only disqualified when you are indebted for goods and services. Did you get the point? Each and everything. And that too. From whom? From the company. Company includes holding, subsidiary, associate, and what? Brother and sister. हमेशा याद रखना. So tell me the 5 disqualifications. Body corporate or a company except LLP disqualified. Officer or employee, who you or your partner, disqualified. Entered into employment or partnership with the officer or employee, who you and your partner, disqualified. From 4th point onwards, relative, you and your partner holding any security, any value, immediately disqualified. Relative may hold up to rupees 1 lakh of face value, and if they breach that 1 lakh, that too you will be disqualified, but after 60 days. Relative ka definition you understood? Tell me last time. Spouse, mother including stepmother, father including stepfather, brother including stepbrother, sister including stepsister, son including stepson and son's wife, daughter does not include stepdaughter, but daughter's husband is included. Is it one relative limit or relatives limited? Tell me the 5th one. You, your partner or your relative are indebted to your client for goods and services exceeding, you are immediately. And let's do the next one. That next one is very similar to the earlier one. Earlier one and next one may read the both and tell me what difference you are able to get. Now here also you, your partner and relative. Here also what? Indebt. But now for what? Guarantees and security, which makes it different from goods and services. Here it was goods and services. Here it is what? Guarantee. What is the limit above? What is the limit here? More than 1 lakh. So बता हमारे time पे what was the limit? 1000. If you are indebted to your client even for 1001 rupee, you are immediately what? ये 2013 Act की limit है. 5 lakhs and 1 lakhs. In our case, when I read it, these disqualification during my time, so it was used to be 1000 rupees. 1000 rupees was the indebtedness and guarantee. But let me give you one question so that you can answer it. A Limited is my client. A Limited went to SBI to take a loan of 1 CR. SBI rejected the application because they did not have any guarantee or security to offer. The branch manager of this SBI is a very good friend of X. X is a cost auditor of what? A Limited. Who came to know that they are very good friends? A Limited. A Limited requested its auditor X, can you talk to the whom? Branch manager and be my guarantor. Be my. Now who is giving guarantee to whom? For whom? Cost auditor is giving the guarantee to the third party on the behalf of the client exceeding 1 lakh is the amount. What do you mean by giving guarantee? In case A Limited will default in this loan, who has to repay the whole loan? X has to repay. So am I under a guarantee or a security more than what? 1 lakh? My whole firm is what? Disqualified. Did you get the point? So now I am disqualified. Why? Because I bought any goods and services or I gave any guarantee or security. So who three people will disqualify you? You, your partner or your relative should not give guarantee or security exceeding. Will your answer change if this loan amount is 8 lakhs? Answer will remain same. If it is 80,000, now you are not what? Disqualified. So remember the limit. So that indebtedness was for goods and service. This indebtedness is for guarantees and securities. I hope you got the clarity. 100%. So tell me the sixth one. And then leave. No problem. That's it for today. Tell me. Body corporate or a company? Except LLB. Second one. Officer and employee. Third one में employment or partnership with the officer or employee. Fourth one में. Three things, one added, relative. Holding security, you are immediately disqualified. Their limit is up to rupees. More than 1 lakh, 60 days disqualification later on. Are you getting the point? Next one. Indebtedness ke 2 point. Indebtedness for goods and services exceeding. Indebtedness for guarantee and security exceeding. In all the 6 cases, your whole firm is what? It means your relatives can also what? Disqualify you. Remaining we are going to continue tomorrow. Thank you so much everyone. See you guys tomorrow. Bye.